Good morning. I'm joined by Russ Cummings, the Chief Executive of Imperial Innovations, who's going to take us through some of the changes over the last year in the business. Russ, welcome.
Good morning.
Well, as I say, it's been a year since we last spoke. Can you tell us what's changed in that time?
Yeah, there have been three significant developments since last time we spoke. The first is that two more of our portfolio companies have gone on to public markets. So Circassia Pharmaceuticals listed on the main market and Abzena on AIM. So we now have four public companies, which at our last reporting date had an aggregate value of £105 million. So that's the first development. Second is that we've continued to grow our unquoted portfolio, and so that is making great strides. And then the third is that last June we completed a £150 million fundraise, so we're extremely well funded now to support our companies going forward.
And what are you going to do with that funding?
So we raised our money with the explicit aim of growing our portfolio with ambition and pace, and that's exactly what we're doing. We're going to continue to add new companies to that portfolio as well, and it means that we're under no pressure to sell our companies early, which is a wonderful position to be in. And we've already started that. So earlier this year we led a £50 million fundraising for Cell Medica and also an £18 million fundraising for Veryan Medical, both of which continue strongly as private companies.
And can you give us an idea of the current balance of the portfolio?
Yes, around 70% is healthcare, 30% is technology, and actually 50% is therapeutics, and that's a real differentiator for us. And we're very proud of a very exciting therapeutics portfolio.
And why have you chosen to focus on those sectors in particular?
They are a combination of very large markets where we have disruptive technologies, but also they coincide with the strengths of the UK science base, which we're working with. So it's no surprise that we have some fantastic opportunities in therapeutics, materials, ICT and medical technologies.
And you've got quite a heavy weighting, obviously, in therapeutics and medtech. Is that something to be concerned about, or is that a strength that you aim to increase as time goes on?
No, we are delighted by the strength of our therapeutics portfolio, and in a way, the growth of that as a proportion is a symptom of success. Because companies like Circassia Therapeutics have grown in value, so therefore their proportion of the whole has increased. But that's something we're very happy with. We don't have a formal asset allocation policy, and our success in therapeutics is actually drawing more opportunities to us. And of course, these companies require significant capital. Having said that, we're working very hard to grow our ICT and materials portfolio, but some of our software companies get to revenues and cash flow break even quicker, so require less capital, and indeed some of those companies are being acquired earlier, and so that makes it even harder for us to build that aspect of the portfolio, but not through the want of trying, and indeed delivering successful returns.
I understand you also focus on a golden triangle roughly bounded by London, Cambridge and Oxford. Do you think that excludes any good opportunities?
Of course, there's some wonderful science outside of that region, but the reason we very deliberately focus on Oxford, Cambridge and London is because of the quality of science in that area. It's home to four of the world's top universities with an aggregate research budget of around £1.4 billion per annum. So that is why we focus on quality. However, there's another reason, which is that we believe it's very important to stay close to those centres of research when you're building companies, because building businesses requires heavy lifting, and having science is good but not sufficient, because you also need management talent and capital. And there's a high concentration of management talent in the southeast, and there's also presence of co-investors to help us build those businesses. So this is hard enough to do in and around the Golden Triangle, and I think it gets harder if you spread yourself thinner than that.
Investors in this country now have 4 listed commercialisation groups to choose from. How do you differentiate yourselves from the others?
Well, first of all, I think it's great that we now have 4 companies, so investors have a choice, and that's drawing more capital into the sector, which is good news. Then I think the differentiation between those 4 companies perhaps start and is most obvious in the geographic focus. So we've talked about our focus around Oxford, Cambridge and London. IP Group cover a broader range of universities in the UK and increasingly in the US. Allied Minds are working with US technology and research centres, and Mercia, Midlands and the North. So that is one apparent difference. There's also different sector focuses. I think we are differentiated by the strength of our therapeutics portfolio. So if investors want to access the best of UK biotechnology, then perhaps Innovations is a good place to start. And then investment style. We have a preference for keeping companies private for longer, perhaps. You've seen us raise substantial rounds, such as £50 million for Cell Medica as a private company, whereas that's the kind of quantum of money that others have perhaps accessed public markets for in the past.
I see. And what kind of metrics should an investor judge your company on?
So we measure ourselves on long-term value creation, and therefore what matters to us is the progress being made by our portfolio companies. So we're looking for the milestones that they're achieving, perhaps in clinical trials, the starting or the reporting out of trials, the launching of products, or growth in customer base. So that's what really matters to us. In a way, particularly because the bulk of our portfolio are private companies, the financial performance tends to follow after that, or indeed happens because of a significant transaction, whether it's a listing or a trade sale. So our results in any one particular financial period can be lumpy, and we also now have a substantial quoted portfolio which will be marked to market. So we concentrate on long-term value and progress in the portfolio.
What kinds of things should we be looking out for over the year to come?
Our strategy is to deploy capital into some of our most ambitious businesses, and you've seen funding rounds occur in those companies. We have a number of our therapeutic companies which will be starting trials or reporting out on trials, and so it's the news flow from our portfolio companies that we will be reporting on.
And I know you're in a closed period and so can't comment on specific numbers, but can you give us some idea for the feeling in the business?
Well, as we said in our full year results, we remain confident about the prospects for long-term value creation from the portfolio, and that continues.
Russ, thank you very much. And if you'd like any more information, please visit the Edison website.